What's up, guys? I welcome you in this wonderful video. So there is something interesting that I want to share with you. I'm here opening this beautiful chart. Let me remove that drawing. I'm here opening this beautiful chart, and we can see prices are moving up, and then now they are moving down. And a trader can ask himself, is it the right time for a sell? Is it the right time to execute a short trade? Because you can observe here that we have a very interesting pattern with the head here, with the shoulder, and the shoulder this side. So we basically have the head and shoulder pattern, which is a reversal pattern. It shows that it might be that now prices is reversing from moving up into moving down. And we also have our neckline here, which was then broken, and this right here is now acting as a retest. And one can argue and say, no, how do you say it was broken and then now it is acting as a retest? You can observe how price is behaving in this next wave here. We can see that the edge or the neckline in this case is up here, not down here. That is up here. That's why you don't have to go with perfect patterns. You just have to observe how the price was behaving. So for the fact that price broke here, that was a very clear sign to us, because it means that it is now giving us a lower low, a low which is lower than the previous one. If you can draw another structure, we can draw it all the way there, going up like that, because a head and shoulders can be in a diagonal shape as well. It depends on how the price was behaving. So we have a retest here, and we had a breakout earlier there, depending on how you want to look at the price. So with this pattern, a trader can say, okay, because I've observed this pattern, should I now press the sell button? Let me just go to the daily to just show you guys something. You can see in the daily that we have very interesting structure. You can see that we had support here. Price was bouncing here as some kind of support, meaning this area here, it was buyer's territory. Previously it was buyer's territory, meaning that's where the buyers were taking the price, pushing it up, or that's where the sellers were failing, because they will try to push down and they will fail, try to push down, they will fail, they will try again, they will fail, meaning this area here, it is buyer's territory going all the way up and then going all the way down from this area. Now it has become the seller's territory, meaning the sellers have won. Why? Because they broke out here, meaning all the way down. Now this area is all controlled by the sellers, meaning if the buyers want to dominate, they have to go all the way up to above that region then. So for the fact that price bounced here, it shows us that indeed the sellers, they fought and they refused when it comes to buyers wanting to control the price. They refuse, meaning still now it shows us that, okay, the sellers, they're still in control because they were able to take the price again all the way here where they took it before as a breakout. So they took it and pushed it all the way down, meaning even when we look at the hard time frame, we can see that indeed the price is getting controlled by the sellers, as it has been with this previous impulsive wave. And then when it comes to now executing your trade, if you want to enter, and let's say if you want to sell here, to just press the sell button here, you have to make sure that what you do here is in sync with every time frame. For an example, we are from the daily, and we see that in the daily we indeed observe a selling signal, and we are here on the 4 hour. We can say that we observe a selling signal, but there isn't much clarity in terms of this, because you have to move from analyzing the entire structure or the bigger structure as we did here, going down to analyzing the waves, which is these two structures here as we did, and we observed the reversal pattern, and then moving further into analyzing this corrective wave, which you're gonna be using to execute your trades. So let's go down to the to a little bit smaller time frame, like the 1 hour. So one other thing that I can advise you guys is that when you analyze, we know that we use multiple time frames. Some prefer 3 time frames. That's also advice that we usually give. But what I can say is that if you don't understand what the price is doing in that particular time frame, don't be afraid to go beyond your defined time frames. Let's say you're using the 1 hour, 30 minutes, and the 4 hour, but if you don't understand anything within those 3 time frames, don't be afraid to say, let me go check to the daily, let me go check the 15 minute. It's gonna help you a lot, because what you have to know here is that you're trying to understand what price is doing so that you're gonna react to what price is telling you. You are not trying to only stick to fixed rules. You have to be creative as a trader. So here we are on the 30-minute. We can see that this corrective pattern is very, very interesting, and it is so visible. We can see that it moved in this kind of a channel, going all the way up, giving us higher highs and higher lows. However, we can see that with this structure now going down, this wave going down, and then after that wave we had another one going up, and then unfortunately this now didn't conform to the way the channel was flowing. It didn't conform, meaning it wasn't able to break this high, because if price is controlled by the buyers, it has to give us higher highs and higher lows. But unfortunately here, this wasn't broken. This high wasn't broken. Unlike this one, which was broken, and this one, which was broken, but then this one wasn't broken, which tells us something that, okay, now it means that the buyers are getting weaker because they failed to beat their previous record. They're getting weaker. And what does that mean? It means that a breakout is likely to come. A breakout where? A breakout on this side, which you are actually waiting for. Because when you are entering your trade, you need to make sure that you enter at the right time, and you make sure that when you enter, price doesn't go against you. Usually when you enter early as a trader, you can enter here, you can sell here, and price will start going against you and then go down. And as it goes against you, some will panic and think that they are losing, or those with smaller account, they will indeed lose. So you have to make sure that you enter where price will no longer go against you. Meaning here you have to then wait for price to break here, even if the breakout is so light. Let me say, put this one back. Let's say price just goes here and breaks. For the fact that it broke a little bit and then it gives you another high, and let's say the high becomes lower, just like this, and then the next one becomes lower, then this is a clear pattern to say, okay, now should look for selling trades, because this wave is persisting longer, meaning it is now a sign that, okay, it's a beginning of an impulsive move, not just a mere corrective. It will be a sign that's the beginning of another impulsive move. So that's what you should be waiting for. And let me just keep it short and leave it here. Thank you, guys.